This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we wrapped up the month of October, take a look at Friday's trade action. We are joined by DuWayne Bosse, Bolt Marketing up in South Dakota. DuWayne, it is good to catch up with you, buddy. It's been a little while, but for good reason. I know you've been busy with harvest up there. How's things been going?
Really good. And yeah, I appreciate the patience. I know you checked in a couple times, but I was like, I don't know how the interview is going to go from the grain cart. They usually stick me in that. And it was fun, to be honest with you. If you ever get kind of tired of farm work, you just stick behind a computer screen for a number of months and you'll love it again. And it was really good. The weather was perfect. Yields were good. In Northeast South Dakota, actually, they were very good yields. I think we lived on subsoil. We farm a little bit over in Minnesota, west central Minnesota, and that got a little dry. So a little disappointing yields there. But, the lack of rain we had, I don't know why that would shock anyone a little bit. And I think USDA is dead on with their yields. And maybe that's why the trade's gotten just a little bit boring, because we probably know the supply side of issues.
Well, you hit it on the head. That's another way for me to say what I've been saying the last couple of days. I felt like I've been watching paint dry. It's been boring trade, as you said, Duwayne. And more of the same on Friday. I mean, we started kind of risk off. I think we were waiting on some of that economic data to come out, but then once we got it, we just kind of drifted off the lows, and we've just really been drifting in tight trading ranges here, especially in corn and soybeans, Duwayne.
Yeah, corn and soybeans, when you look at the weekly changes, there isn't much of a change. And the weekly range is within last week's range. And last week felt a little boring to me. And I think it makes, your job, where we need to come up with, why the market did everything every day, a little bit difficult right now. So hats off to you guys. But I mean, there's still news, but it's funny. It's not moving the market like it used to. For example, I'm skipping the wheat here, but the Russia-Ukraine war really escalated the last 2 weeks. And it really looks like, we're not going to extend that export corridor there through the Black Sea, but you can't get wheat to rally off that news also in the last 2 weeks. And when you talk corn and soybeans, you mentioned those two first. Good exports for soybeans, but we expect that this time of year, and horrible exports for corn. And, so that's what we have to trade off of right now, because like I mentioned, the supply side is kind of known. I think there's a lot of traders out there saying, I don't think USDA is that far off on the yields. I know sometimes, small crops get smaller, but not by much anymore. I think they're really close, and it kind of develops this kind of quiet trade. Now, on the outside markets, we did have things moving. I mean, don't look now, but the stock market's up another 700 points. That's been rallying nicely this week. Monday and Tuesday, the dollar crashed 1,000 points each day. And I thought, this is really going to help the commodities. A little bit of talk of, yes, interest rates will go up in November and probably December, but maybe tapering off. So we're getting typical futures market. We've already got that priced in. I thought, we're making a low in the equities. Here we go. Now the greens can rally and put me to bed, sleep, snore fast. We just can't move, can we?
No, we can't move. But, it's one of those things where in everything, it feels like we're not falling out of bed. We're not shooting to the upside. We go test our highs. We hit that resistance. We come back down. We go down, test the lows, find support, come off of it. There's not a major story. You mentioned that there's a lot of stories out there, but there's not a major story that's giving us a reason to break out either to the upside or downside, Duwayne.
No, there isn't. And you're right. And maybe as a producer myself, and for the rest of the producers out there, I should be happy. I mean, we are at 680 corn and not going lower. We're just under $14 for beans and not going lower. And maybe that's a story in itself. Yes, demand isn't great for corn, but we're not dipping lower, because I think we know that if we do dip lower, Jesse, then demand will just pick up. Export sales were horrible this week, but you know who the number one buyer was? It was China.
Mm-hmm.
So you know how they are. They're a bargain buyer. If we dip much, then they'll buy more. Then all of a sudden, are we talking about export demand has to increase? Either way, with these tight supplies, I think corn and soybeans, even though we're bored right now, they have very good support underneath them. Like you mentioned, we get to these lows, we find buyers. I'm just worried and cautious that the funds that are already extremely long the corn market, I hope they don't get bored with the market. But I think they're in it as more of a long-term trade, because if they get bored and aren't making money, because of course the market has to move for them to make money, then if they go to exit, well, then we are going down. But I don't know. I'm throwing my crops in the bin, Jesse, and I'm bullish when I sit down and do fundamental research and think of 2023, because we got to gain 4 million acres of corn. Our supply is already tight, a little dry. If anyone's noticed, actually very dry, the driest we've ever been as far as percentage wise in the Midwest. So it's the right time of year to be dry, but a lot of things throw caution in there that, like, next year we can't just have these prices collapse, at least not in the spring.
Well, you mentioned a point that I've heard from a lot of folks. You're throwing a lot of crop in the bin. Thinking about the cash side of this market, we've seen basis firming in many areas, despite the logistical challenges we have out there, the river issues, the potential rail strike, et cetera. But yet we're seeing that basis firm up. But also with the quiet market trade, I think kind of a two-part thing. Love your thoughts on basis, but also some of that mentality of, okay, hey, when the market's quiet, this is a good chance to really take a look at my marketing plan, not
Yeah.
only for this crop, but also even into the 2023 crop.
Yeah, no, you're right. First on the basis, starting to improve. I mean, it never really got bad
Yeah.
as far as
Yeah.
harvest. When you think of these prices, it should have been a lot wider, but we all know last year's crop was also small, or the supply was anyway. So elevators were hungry, they were empty, they were ready to get this big crop coming in. And as harvest was getting over that 50% done, I think they started to go, where is it all? Our bins aren't full. We thought we'd have to make piles by now. And there's some areas like southern Minnesota with a monster crop where there are piles everywhere. But up here in Northeast South Dakota, there's not. Through Iowa and Illinois, I'm not hearing a lot of piles, in some areas. But yeah, so because those elevators aren't getting all those bushels they thought, the base is increasing a little bit, especially up here. I think there was a lot of rail already booked for December, January timeframe, and they're just a little bit nervous, like, am I going to get all the beans in now? And these farmers, remember, no one's going to lie to you. It's been a good couple of years, as long as you haven't had a disaster. Hopefully your revenue insurance kicked in anyway if you did. But I don't think farmers need the cash right now, Jesse. So if they didn't sell it at harvest, it's going in that bin, and the doors are dang near welded shut, even at close to $7. I think it's going to take $7.25, $7.30. I think it might take $14.50 to get beans moving again. And you're going to find that as harvest ends here, that the cash basis will get stronger and stronger. So it's going to be an interesting play.
Well, I wonder as well too, for folks who maybe have taken some stuff to town, taken some stuff to the elevator. I think they need to remember too that they have options to re-own this market if
Yeah.
they want to, and that's something else that I think is at play for some of those bushels that have gone to town, DuWayne.
You're exactly right. And going into the second part question there about the marketing plan you had earlier, it's kind of tough right now. We're sitting down and everyone's marketing plan looks a little bit different, because some of the guys that have those extra bushels that went to town, you mentioned, kind of what happened was they filled their contracts at town, they filled their bins at home, and then they had extra bushels left over. Well, good for them. That was a great year. That was pretty easy. They probably sold those. And that decision depends on each individual client I'm talking to. One guy's like, I can just tell he's happy with it, doesn't want to risk it going down, doesn't want to pay storage. Go ahead, let it go. I have no problem. Other guy telling him, hey, I'd pay for storage because of the basis I mentioned previous, that I think it's going to prove enough to pay for storage. Then you look at the marketing plans and you wonder, like, what do you want to do here? There are ways to buy it back. The problem is right here, I'm looking at some of these call options, Jesse, that are, less risk if you just buy calls instead of straight futures. And, it's 30 to 35 cents for a couple months out. And I'm just worried the rally that I see is about 30 or 40 cents this winter, unless South America has a big problem. So I'm not going to tell someone not to do it, but I'm just worried you're going to get back what you paid anyway, probably. So a lot of people are looking at the price, Jesse, and just going, I don't know if I need to buy it back. That's usually where I step and go, I kind of agree. Now we drop to 650 or below on the futures, then I think it's worth buying back. So marketing plans, like, are geared to every individual, totally different, and there's no exception here to the rule.
DuWayne Bosse, Bolt Marketing, our guest today here on Market Talk. And earlier, DuWayne, you brought up the wheat market. I think another thing there as well, you and I were chatting about this before we went on air. The winter wheat conditions coming up on Monday. I think that'll be an interesting thing to watch for this wheat market.
I hope so, because I started thinking this wheat market's a buy here yesterday, thinking that we've got this big conditions report coming. We kind of sold off yesterday after midday and sold a little bit more today. Not quite sure why. I mean, the funds are getting short the wheat market. I don't know if that's just a leverage tool where they're buying soybeans and selling wheat. It very well could be. That's what they like to do. But yes, the winter wheat crop conditions come out for the first time Monday afternoon. Everyone's well aware of the drought in the southern plains. I think this conditions report could be low to record low, and that should spike some buying interest. Now, yes, the bears will have their points about our price being sharply higher than Russia, sharply higher than Ukraine, but is anyone buying those two places? Not really. Argentina's crop keeps getting smaller. And here's the thing, our supplies here, Jesse, are at a 15-year low. Mm-hmm. That enough should support prices. Now, granted, we're talking $8 wheat and not $6 wheat like we normally are, but supplies that tight, if you start to threaten next year's wheat crop, then I mean, we could really rally 50 cents to $1 in this market if people think next year we can't raise a wheat crop. And that's the same with corn and beans. It's all tight. And if demand's poor, okay, we don't have to go higher, but we still got to raise a crop next year.
Well, and I know the wheat market traditionally is always kind of tied with that dollar, and you brought up the dollar break, and then the dollar came back a bit on Friday, and the ebb and flow in this macro market and the talk of the interest rate hikes from the Fed again, and just there's so much on that macro side I feel that is still a weight or an influence, I guess, in these wheat markets that it makes it tough to watch sometimes unless we get some huge fundamental story like the Russia-Ukraine war, for instance, to really give us premium in the wheat markets.
Yeah, exactly. You know, a couple of years ago, if I would have told you Monday and Tuesday both that, you know, the US dollar is down 1,000 basis points, you said, well, we must be up 20, 25 cents each day because it usually does the opposite of the dollar. And we just couldn't get anything going there. And I think it's because of just what you mentioned. There's just that general consensus, that general fear out there of we just don't know. You know, as far as the recession talks, and there's a lot of people very concerned about the spending that we've done is going to kind of bury us and put us in a recession. I'm a little bit the opposite. I wouldn't say the opposite way, but I'm not as concerned about it. I don't like what we've done. Don't get me started on politics here. You and I will take this short video into a 2-hour deal and have people calling in. But I think the futures market does a very good job of pricing in the worst, and I think we've already done that. That's why last week, a week ago, when there started to be talk about the Fed starting to understand and see that these quarterly earnings in a lot of these companies that's in the stock market aren't performing very well, and they're not getting to expectations. The Fed talked about, well, maybe we're hurting our economy a little bit with these higher interest rates. So they started talking about easing in 2023. So that all being said, I really thought or feel that, you know, the US dollar maybe is already put in a high, but I'm kind of on an island there, Jesse, and if more people start saying that, then maybe the rest of the commodities can rally.
Well, DuWayne, as we look as well, livestock trade, let's go there a little bit. Hogs, a nice recovery on Friday after a couple of days of selling. Felt like maybe some consolidation, but I wonder, Friday, was that more of a technical bounce, do you think? What are your thoughts on that hog market right now?
I think today's rally was more technical, more of a whoops, we overdid it yesterday. A hard collapse yesterday, kind of out of nowhere. You know, this market's been steamrolling and been very bullish. And it's almost like somebody pumped the brakes and said, wait a minute, you know, where were we at last year at this time? And the answer is about 20% lower than this price. So it's kind of like somebody sold off a little bit. Maybe the funds rallied us the last couple of weeks and someone said, I'll take my profits here and run. And cutouts had backed out a little bit. Seasonally, we should still see some gain for the next couple of weeks in pork cutouts. So hopefully we can see some recovery there. I also think part of this rally was thinking that China would come in and buy some pork from us. And they have. It just hasn't been the volume we thought. Year over year, of course, we're down sharply on exports. But the reason why we thought China was going to come in and buy is that their pork prices have skyrocketed there, despite all their COVID lockdowns. But yep, yesterday, now there's COVID lockdowns in China again. And President Xi has really been in the news after the election last week about, you kind of better get on board with him or you're just not in the political realm anymore. You kind of disappear a little bit. So
Mhm.
that kind of has people a little bit concerned about the Chinese economy. And I think maybe that was why we took some profits in hogs yesterday.
Cattle market finding some good feedlot trade here this past week, and anywhere from $2 to $5 higher, even in some areas. And this cattle
Mhm.
market really feels like it's maybe finally broken out to the upside a little bit here, at least moving us out of the range we were in, Dwayne.
Yeah, no, a good market there. Maybe a little bit disappointed in the futures this week, but we got to remember how much we rallied last week. We almost had to wait for the cash market to catch up. And you're right, cash trading above 150 now. Glad to see it. Higher again this week. Kind of surprised we couldn't rally a little bit more today, but again, every Friday you get a lot of guys, and me myself included, that get a little bit nervous to put new positions on before the weekend because we do have a war going on in Ukraine and all this dirty bomb
Mhm.
talk. So, no, solid market there that should have very good support. Look for this cash market to continue higher, Jesse. I think Packers are fairly short. Now, next week is a new month already, so they can bring their contracted cattle in, but I don't think they have a lot of them. I think they're going to keep paying up for the cash market, and cutouts have been very strong there on the beef side. And with all this inflation and everything else, people are still paying good money for the meat, which is great. Now, bird flu has something to do with that too, because there's no cheap meat out there, is there? Chicken's crazy
Mhm.
expensive. So if you're going to spend that much for a chicken, you might as well get a steak, I think.
Well, very true. And I wonder too with the feed costs out there. We see basis. We're seeing some of those basis levels for corn, trying to pull some of that corn into feedlot country, but yeah, we're still seeing this cattle herd shrink. I think that's an interesting dynamic we have to watch moving forward too.
Well, it is. And, USDA has got feed and residual category off about 325 million bushels from last year. The problem is we don't know, is that all feed? Is that some residual? We just don't know. But I think a good mix of it is definitely the feed side. And I think people agree that's why USDA cut that demand. And therefore, the cattle market's rallying too. But, you think about it, I've heard from a couple different people that the Montana herd, cow-calf herd, is down by a third. And that's a big major state. And then with all the drought in the southern plains, we kept bringing in more cows and not putting heifers and steers on pastures. So you want to see a market really take off. Watch this cattle market if we get to the spring and we have nice rains and green grass and we don't have a recession. And we could be talking 170 fast fairly easily, and very expensive cow calf pairs to buy as these people try to build herds back. So it's fun, but also tough to expand when they get high priced, obviously.
Well, DuWayne, great stuff. We made the best of what's been a quiet week in the trade. Before we wrap it up, I will throw it to you. Final question, floor is yours. Any thoughts? Anything else you want to mention? Anything you want to reiterate before we run out of time?
I really loved what you mentioned, Jesse, and we need to do that with our customers more. Sit down and maybe make some marketing plans. Harvest is a big push, and boy, this fall was one of the biggest I've ever seen because there just wasn't a break in the weather. So when you get done, take a little break, but sit down in the office and look where your bushels at and what's your game plan. And like I said, it's okay if it's different for everybody, because trust me, here, everyone who calls, it's a different situation. So but sit down and do some sort of marketing plan. And if you decide to do nothing with your bushels, that's fine. Then you decided that, but just don't forget about it and get your production into your crop insurance agent. They appreciate that.
Well, DuWayne, if folks need a little advice with that marketing plan, I know they can reach out to you there at Bolt Marketing. What's the best way to do that?
Yeah, they can call us here anytime, 605-448-2365, or they can check us out online at boltmarketingllc.com.
DuWayne, appreciate the time as always, sir. Have a great rest of your day, and we'll talk to you again soon.
You too. Thanks, Jesse.
That's DuWayne Bosse, Bolt Marketing, joining us here on Market Talk. And that's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.